Hi everyone, welcome back to Saheb Academy. Today in this fifth video of financial statements of sole proprietorship with adjustments, we are going to see our third problem, and the main focus of this problem is manager's commission on net profit after charging such commission. Okay, this type of adjustment. And one more tricky part is there regarding provision. We will see when it comes. All right, so let's start. Let's analyze this question first and then let's understand how to solve this. Now see here, from the following trial balance of Narain as at 31st March 2025, prepaid trading and profit and loss account and balance sheet. Okay, here we have been given the data. Let's understand. First we have got opening stock, it will go in trading account, land and building, balance sheet, machinery, balance sheet, furniture and fixtures, balance sheet, purchases, trading account. Do we have purchase return? Yes, we can see purchase return over here. This will also go in trading account. Then salaries will go in P&L, general expenses, P&L, rent, P&L. Then we have postage expenses, P&L, stationery, P&L. Then we have wages. Where will wages go? Trading account. Freight on purchases, trading account. Carriage on sales, P&L. This is carriage outwards. Okay, yes. Then repairs also P&L. Then we have sundry debtors will go in balance sheet. In the bracket what they are saying, including Mohan for dishonored bill of 800. It means that we have to receive 800 for Mohan and this is included in this. Is that clear? Okay. Then bad debts will go in P&L. Yes. Cash in hand, asset will go in balance sheet. Cash at bank, balance sheet. Yes. And then sales return will go in trading account. We have to subtract from sales. Yeah. So this is over. Then we have, see here, capital, this will go in balance sheet. Then we have loan from Mrs. Narain at 9% per annum. Now understand, have we given a loan or have we taken a loan? This is loan taken from Mrs. Narain. Yeah, we have taken a loan. This is a liability. Okay, it will go in balance sheet on the liability side. Fine. Sundry creditors, balance sheet. Okay, sundry means what? Sundry means just collection. Okay, right. Then what? Sales trading account. Do we have sales return? Yes, we have taken it over here, so we will subtract it from the sales. Discount received, P&L. Fine, we have identified what all items we have and where will they go. Fine, now let's just look at the adjustment. See here, the first adjustment, wages for March 2025 2100 have not yet been paid. If they have not been paid, that is wages outstanding, or you can say outstanding wages, isn't it? Outstanding wages. What will happen because of this? You have to increase the expense and in balance sheet you have to recognize a liability, current liability. Now understand, wages is a trading account item, so increase of expense will happen in trading account. See here, you have wages, no, 26,000 plus 2,100 you have to do in trading account. Fine. Second one, general expenses includes insurance premium. General expenses, where do we have general expenses? Yes, 2,500. Now let me just mark, on wages we have an adjustment, okay, and general expense also we have an adjustment. What is the adjustment? They are saying it includes insurance premium, okay, of 600 paid for the next year. Next year expense we have paid right now. That means that is a prepaid expense. We have paid in advance. Yes. So this 600 which is there in general expenses, yeah, in this 2,500, yeah, that is prepaid expense. So prepaid expense, prepaid insurance we can say. Yeah, what happens due to this? We have to subtract the expense. You all know we have to reduce the expense because that expense is of next year, right? Not of this year. So we have to reduce the current year expense, and in balance sheet we have to recognize an asset that in future year, in next year, we are going to get benefit. Yes. Third adjustment then. Let's understand third adjustment. Half the amount of Mohan's bill is irrecoverable. They are saying half amount will not be recovered. Yeah, that means half is bad debt. Now half of what? Half of Mohan's. How much is due from Mohan? From Mohan we have to get 800. They are saying half of this. So that is 400, no? 800 into 50%, that is 400. So 400 bad debts here we have. How much? 400 bad debts. Yeah? We can call this as what? Further bad debts. Isn't it? It's further bad debts. 400 further bad debts. How did we get to know that? Really simple, no? 800 into 50% or 1 by 2 you can do. That's how we got to know that. Fine. So there is an adjustment. Adjustment on what? Adjustment on bad debts. Yes, that 400 further bad debts will get added to the 600. And then in sundry debtors also, yeah, in debtors also you have to reduce, no? Further bad debts always you have to reduce in the balance sheet. Yes. Okay, and then they are saying create a provision for doubtful debts on 5% on other debtors. What do they mean by other debtors? Other debtors means you have to exclude the Mohan completely. Okay, not just further bad debts, entire Mohan has to be thrown out. I mean, not written off. For the calculation purpose of provision, you have to exclude the Mohan. We will see how it will happen. It's really simple. Let me just show you the calculation. See how much are the sundry debtors. Sundry debtors are 30,000. Let's just do the calculation right now only so that you will not be confused later. I always do know in working notes only the balance sheet calculation. So let's just do that. Debtor 30,000 you have. Further bad debts happened how much? We got to know it is 400, no? Yes, 400 further bad debts happen, that you definitely have to subtract. So you will subtract that. Then you will get how much? That is equal to 29,600. From this, what you have to subtract? You have to create the provision. How much? PDD 5%. But this provision will not be created on this. That was the tricky part that I was talking about in the beginning. Usually what happens? We create this 5% on this only. But here it won't be like that. Why? Because understand, they are saying create a provision for doubtful debts at 5% on other debtors. You have to completely exclude the Mohan. From this 29,600, you have to exclude the remaining balance of Mohan as well. Okay, remaining balance also there, not 800 total balance was there of Mohan. 400 bad debts, still 400 balance is there. This also you have to remove. Okay, I mean just for the calculation purpose, okay, it is there in the balance sheet. Just for the calculation purpose of PDD you have to remove. So 29,600 minus 400, that is equal to 29,200, isn't it? On this you will calculate 5 by 100. Yeah, on this you will calculate. That comes out to be how much? Let's just do it. 29,200 into 0.05, that is equal to 1460. So 1460 will be your what? Provision. This is how the balance sheet presentation will be. Okay, then 29,600, yeah, 29,600 you have to subtract, no? So that is equal to 28,140 you have to show in the outer column of the balance sheet. Is this clear? Okay, this is how it will be the calculation of the debtors. Fine, understood? Yes, so we have two adjustment on the debtors, isn't it? One is further bad debts and the second one is PDD you have to create. Is that clear? Yes, and here there is no shortcut, nothing, because there is no old provision, no? There is no old provision, understand? No old provision, so no shortcut. Separately in P&L you have to show what? You have to show bad debts plus further bad debts, this 400 plus this 600, yeah? So 1000 bad debts will go in P&L, and then in P&L PDD will also go, 2 PDD 1460. All right, separately we will take it. Is that clear? Yes. Okay, understood. Then what do we have? Then next adjustment is depreciation. Depreciation easily you can calculate. Yeah, we don't have to discuss anything. Easily, you know, land and building 2% they are saying. So land and building directly you will calculate. There is no dates, nothing. No time apportionment, nothing. 35,000 into 2%. Machinery 10% they said. On machinery calculate 10% on 50,000, that is 5,000. 5,000 will go in P&L, and then in balance sheet you have to show the reduction. Yes, furniture, I mean you have to reduce, okay, not just showing. Then see furniture and fixtures, 5,000 is there. How much they said? 15%. Just calculate, right? Simple. Depreciation easily you can understand. Let's just mark over here. Still on land and building you have, on machinery you have, furniture and fixtures you have. Depreciation adjustment, really simple. Fifth one, loan from Mrs. Narain was taken on 1st October 2024. Interest has not yet been paid. Yeah, If interest has not yet been paid, that means interest is outstanding. Yeah, we have an adjustment of outstanding interest. What we have to do? We have to increase the expense, and we have to what? We have to increase the expense, and in balance sheet we have to recognize we have to pay interest, isn't it? Yeah, we have to recognize a current liability. Loan from Mrs. Narain was taken on 1st October, they are saying. Let's just calculate, really simple. 1st October till 31st March. Okay, that's the 6 months, no? October, November, December, January, February, March. Yeah, 6 months. So 6-month calculation you have to do, really simple. How much loan did we take from Mrs. Narain? 30,000. Okay, Mrs. Narain is wife only, right? From wife only he has taken a loan. So 30,000 into 9% into 6 by 12. Okay, this calculation you have to do. Is that clear? So let's just do that. 30,000 into 0.09 into 6 by 12, 6 divided by 12, that is equal to 1,350. Fine. So 1,350 is the outstanding interest. Now check in the balance sheet. Is there any interest given over here? No, nothing. They haven't calculated only. No interest is given. So what you will do? You will take in the P&L what? Outstanding interest on loan. Fine. Okay, in the P&L you have to record the expense. They have not recorded anything, so you will record now. Fine. Okay, understood. So let's just mark. Okay, or from here we have a adjustment. Okay, Mrs. Narain, and then next adjustment is value of stock at hand on 31st March 2025 was 14,900. This is closing stock, isn't it? This is closing stock. So what you have to do, in trading account you have to take, and in balance sheet you have to take. You all know that, closing stock. Yep. Okay, then what? Manager is to get commission of 10% of the net profit after charging such commission. What they are saying? They are saying, you know, we have to calculate the manager's commission of the net profit from which commission has been deducted, the true net profit. But how to do that? We'll see. Okay, we'll do the calculation later and we'll see later, not right now. Okay, we will think right now in our mind. This adjustment is not there only. Okay, we will solve the question entirely. At the end of P&L we'll do this. I will show you how. Now just forget about it. Okay, let's just go to the trading account now, right? Let's just move on to the trading account. We have marked everything, no? Isn't it? All the adjustments, everything has been marked. Now let's just go to trading account. Let's see how to solve this. Now see, here we have the trading account. Let's start. First we are going to take the opening stock. Okay, how much is it? 15,500. Let's just take it, 15,500. Then what do we have? Then we have the trading account item purchases, 1,06,000. Immediately look for purchase return, that is 2,100. Okay, we just have to take and subtract it, right? Purchase 1,06,000 minus 2,100 return, that is equal to 1,03,900. Then sales also, right? Let's just take sales. Yeah, sales, how much? 2,07,300. Immediately look for sales return. Sales return, where do you have it? Yes, 5,100. Take it. Fine. So see, okay, is it simple? 2,02,200. Okay, after that what do we have in the question? After purchases, trading account item, we have wages, right? On wages we have an adjustment. What adjustment? We saw, yeah, it was outstanding wages, the first one only. How much? 2,100. What do we do in outstanding expense? We have to increase the expense, and in balance sheet current liability. Okay, right now just doing the trading account. Wages, how much? 26,000 in the question, trial balance, right? So wages 26,000 plus outstanding wages 2,100. We have increased the expense, so that is equal to 28,100. Okay, and then what do we have? Do we have any more trading account items? Yes, freight on purchases. How much? 2,800. Let's just take it. To freight on purchases, 2,800. Okay, anything else? Nothing else, right? All done regarding trading account. We have closing stock, right? Let's just take the closing stock. So closing stock, it was given in the adjustment, really simple. Value of stock at hand on 31st March 2025 was 14,900. So just take it. Now after taking closing stock, there is nothing else. Yeah, now we have to close the trading account. So here the bigger side is the credit side, that is equal to 2,17,100. Take it on both the sides. 2,17,100 minus this, that is equal to 66,800. Is it clear? Simple and straightforward. Now what will happen? This gross profit will be transferred to P&L. On the other side, by gross profit brought down 66,800. Then what? Then go back to the question. Check for P&L items. The first item you have is salaries. Let's just take it. Is there any adjustment? No adjustment. 11,000 easily you can take. Next, what do we have? General expenses. Let's take it. How much? 2,500. We have to take this in inner column because there is an adjustment. Yes, let's just take 2,500. What was the adjustment? The adjustment was, they said, in general expenses there is insurance premium included in that of 600, which is paid for the next year. So that was prepaid expense. We have paid in advance. Yeah, so we have to remove that. How much? 600. No, we have to reduce the expense and recognize an asset in balance sheet. So reduce it over here. Minus prepaid insurance 600, that is equal to 1,900. Clear? Simple. Then what? Then we have, see, rent. Okay, no adjustment. Postage, no adjustment. Stationery, no adjustment. Directly copy paste. 3,000, 1,400, 1,300. Is it clear? See here, rent, postage, and then stationery. Clear? Easy. After that, we have, see, carriage on sales, repairs. Both of these, no adjustment. 4,000, 4,500. Take it immediately. Really simple. Repairs 4,500, and then carriage on sales also 4,000. Clear? Simple. After that, what do we have? We have sundry debtors. Regarding sundry debtors, bad debts, we have adjustment. No, let's just do it right here only. And you know already, we do everything together only. Whenever we get bad debt, we do bad debt, we do provision for discount also. But here there is no discount provision, so forget about that. Okay, so let's just take the bad debts. Bad debts, how much? Bad debts are 600. Here there is no shortcut, no old provision, no shortcut. Separately we have to do. So bad debt 600, take it in the inner column, right? See here, 2 bad debts 600. Then the question said half of Mohan's bill will not be recovered. It is further bad debt. Yeah, 400. So that will get added over here. Add further bad debt. Is it clear? Yeah, Mohan bill, you know now, it's 400 further bad debt. So it will get added and 1,000 will be debited to P&L. Is it clear? Simple. After this, we are going to do the provision also. Yes. So now for provision, you know already what we have to do. Yeah, we have to reduce the other balance of Mohan also. I explained you. On 29,200, we are going to calculate 5%. That was equal to how much? 1,460. Yeah, let's just write over here only 1,460, right? So this came over here. So now the P&L would be debited by this amount. We are creating the provision in this business for first time. So it will be created out of profit and loss, right? Direct hit will come over here of the new provision. Fine. Is it clear? See, 1,460 like this. Is it clear? Simple and straightforward. Now after this, what? So we are done with that. Now just take the adjustment also. We are done with this regarding to P&L. General expenses also done regarding to P&L. And then half the amount of Mohan bill is irrecoverable. Yeah, further bad debt we recorded, no. And then provision also we created, yes. So this much adjustment we are done regarding P&L. Then after this, what do we have? P&L items. Then we have, see, nothing, right? From the debit side, all done. Yes, all done. Do we have anything else? No, nothing. Yeah. Then look in the adjustment. In the adjustment, we have one debit thing, not one, many. Understand now. We have interest on loan. No, interest on loan is what? An expense. It has to come on debit side of P&L. It is not there in trial balance, but we have to take it, right? Nothing has been recorded. Entire interest on loan we have to take it right now as a senior accountant. How much it is? It is 1,350. So take it over here. Okay. See here, to outstanding interest on loan 1,350. Right? We have depreciation also. We missed regarding depreciation. See, yeah, depreciation also we have. No, depreciation also will not be there in trial balance. We have to calculate. Yes. So loan we did. Depreciation, let's just take it. It's really simple. Land and building 2%. 2% on what? 2% on 35,000 is how much? It is 700. Then 10% on machinery, right? They said. So that is how much? That is 5,000. Is it clear? 10% of 50,000 is 5,000. No, right? So land and building depreciation we took. Machinery depreciation we took. Then furniture fixture also let's take it. 5,000 into how much percentage? For furniture 15%. So let's take that. So all depreciation has been taken, outstanding interest on loan also has been taken. Is it clear? Really simple and straightforward. Then what else? Then see, we have taken, no, this adjustment also done, no, we have taken the closing stock in the, sorry about that, we have taken the, you know, closing stock also, right, in the trading account. So we have to take that. And then depreciation also done as regards to P&L. Fine. Okay. And then manager's commission is there. Till now we are thinking there is no manager commission, nothing, isn't it? Yes. So forget about the manager's commission. Now let's just see what else we have regarding P&L. On the credit side, if we see regarding P&L, we have discount received, right? Let's take the discount received, no adjustment, nothing. How much? 1200. So see here, 1200. Is it clear? Simple. Now we are going to do what? We have to do the manager's commission calculation, and we have to take manager's commission. Now understand carefully. Okay, see here, we have to take the manager's commission, but how? What they are saying in the adjustment, they are saying, understand, manager is to get commission of 10% of the net profit after charging such commission. How much? 10%. Okay, 10%. After, they are saying. What does that mean? After, I explained you previously in the video. After means, see, after, you know, recording all expenses, we get this net profit, no? After doing income minus all expenses. Yes, that's the true net profit. So they are saying you have to calculate this 10% on this, 10% on this. They are saying calculate manager's commission 10% on this net profit. Do we have this net profit? No, we don't have it. Yeah. How will we get this net profit? Tell me, how will we get this? Only when we will take all incomes minus all expenses. Do we have all expenses? No, we don't have this manager commission. We have only this much expenses. What expenses? Expenses excluding manager commission. Listen carefully. Expenses excluding manager commission, isn't it? So true net profit we don't have. Yeah, so that is the problem over here. We don't have both of these things, and both of these things are connected over here. That is the problem. Now to solve this problem, we have a formula, right? Now let's understand the formula and the way of doing that. So it's really simple. I have prepared a working note for you to make you understand properly. It's really simple. You all know this if you have watched the conceptual video. See here, fifth working note. Okay, manager's commission. Now the rest 4 working notes were regarding other adjustment. Okay, I will show you at last. Manager's commission on net profit after charging such commission. So now what we have to do, I explained you in the previous video that you have to do this adjustment at the end of P&L. That's what we are doing right now. Do the entire P&L account and in rough find out the net profit as if there is no adjustment of manager's commission, right? That is what we are doing now. See, we took all the incomes. Yes, we took all the expenses thinking there is no manager commission. Yes, just now we did that. We did every adjustment that is possible, that was there in the question, everything we did. Now we are stuck at this only, no, we don't know manager commission, we don't know net profit, the true net profit. Yes, so what we are going to do now, we are going to take all incomes minus expenses excluding manager commission. Okay, that's what we are going to do. See, incomes minus expenses excluding manager's commission. Okay, then you will get an amount. That amount is called as net profit before commission, because we have excluded the commission, that is why. Fine. And on this we have to apply this formula, percentage divided by 100 plus percentage. When you will apply this formula? Only when after is given. Is it clear? Okay, understood. So if we take all the incomes, see, 66,800 plus 1,200, that is equal to how much? That is equal to 68,000, right? 68,000. Then if we add all the expenses, see, 11,000, 1,900 and all this expenses, if we add, yeah, expenses excluding manager commission, if we add, we get how much? See here, I have written already. It is, see, 68,000 incomes as I just showed you, and then if you add all the expenses, that is equal to 37,360. If you subtract, you get what? Net profit before commission. Okay, 30,640. This is net profit, not true profit. This is rough. Okay, we are doing this in rough. I told you na, rough. So this is that what we are doing. Okay, Then what you will do on this, you will calculate 30,640 into 10 divided by 110, percentage divided by 100 plus percentage. I told you na, isn't it? If it was 15%, 15 divided by 115. If it would have been 20%, 20 divided by 120, like that. Okay, and then we get what? 2785 as our manager's commission. Okay, so what is the logic? The logic is really simple. This 30,640 is at what? It is at 110%. Okay, it is at 110%. Fine. So if we divide it by 110, we get what is 1%. Then if we multiply with 10, we get the manager's commission. If we multiply by 100, we get the true net profit. That also you can do. Fine. So we got manager commission 2785. So what we are going to do now, we are going to write over here 2785 is manager's commission, and we know this is 68,000, right? This is 68,000, here also 68,000. Yeah, now as a balancing figure, easily you can find out the net profit that is transferred to capital, isn't it? 68,000. You have to subtract all the expenses. Don't do that. Take 2785, okay, and minus what? That rough profit you calculated, no, that only. Yeah, 30,640 minus 30,640, that is equal to 27,855, 27,855. So that is your net profit, 27,855. Is it clear? Simple and straightforward. This is how you have to do it. Okay, so now you can confirm also. See, the question was saying like this. The question was saying manager commission has to be 10% of the true net profit. So if you take the true net profit 27,855 into 0.10, you get what? 2785. Yeah, 2785. 0.5, ignore that, 2785, rounding it back. Is it clear? So like this you can verify also whether your answer is right or not. Now let's just see the balance sheet. Okay, you have understood everything, right? So we are done with all the adjustment as regard to P&L, right? Manager also done as regard to P&L. Next we have to do the balance sheet. Yes, let's do the balance sheet. Now see, here we have the balance sheet. We are preparing it in the order of liquidity. Okay, current liabilities, non-current liabilities, then capital, current assets, then non-current assets. Okay, all right. So how do we do this? Really simple. Start with the trading and P&L, right? And do all the adjustments. So first, what do we have? First adjustment, we have closing stock. How much? 14,900. Yes, let's just take it. Current asset closing stock 14,900. Okay, tick, go on ticking. So you are done with the sixth adjustment regarding balance sheet as well. Then next adjustment you have is of outstanding wages. How much? 2,100. You know, outstanding wages is a current liability. So take it, current liabilities, outstanding wages, right? Let's just double take over here. You are done regarding the first adjustment in the balance sheet as well. Okay, then what? Then see, next what do you have? Next you have of prepaid insurance. How much? 600. Prepaid insurance, where it will come in balance sheet? You all know it is an asset. It will come in current assets. Yes, prepaid insurance 600. Yes, so just tick that. General expenses, double tick. Okay, then what is the next adjustment? Next adjustment, see, regarding the further bad debts. Yeah, regarding the provision for doubtful debts, where this will happen? Debtors. Yeah, let's just do the debtors in the balance sheet. How you will do it? We have already done the calculation. The same presentation you have to do. There is no difference at all. The tricky part also I explained you. You will not calculate 5% directly over here. No, they have said on other debtors. Where is it? On other debtors. So you have to completely exclude the Mohan. Okay, yes. So see here the presentation, debtors 30,000, same. Further bad debts, you always have to subtract. You will subtract 29,600 you got, but the PDD calculation will not happen on this. It will happen on 29,200. Okay, and the explanation I have shown you. Fine, 1460. Then the outer figure 28,140. Yeah, 28,140. Is it clear? Simple. So you are done regarding this also. Double tick. Then what do you have? Next adjustment is depreciation on land and building, machinery, furniture, 700, 5,750, isn't it? See here, really simple. You will take the values and then see minus 700 minus 5000, yeah, minus here 750 depreciation you will subtract. Is it clear? So you are done with the depreciation also, double tick. Okay, in the question also you can tick if you want, right? See, let's just tick over here also. Land and building adjustment was there, no? Machinery, furniture, yes. And then debtors also we have taken, no? Debtors, 2 ticks, right? Isn't it? 2 effects went, no, on debtors, so double ticks. Right, okay. Then what do we have? Yeah, come back to P&L. If you see the P&L, you will get to know what all adjustment you have. See, outstanding interest on loan we have. How much? 1350. Outstanding interest on loan means what? We have to pay interest in the next accounting period. It is outstanding. It is a current liability, like outstanding wages only. But what do? I've told you, we combine it with the loan only. Whenever we have interest and then related asset or liability we have, we join them always. Yes. So loan from Mrs. Narain, 30,000 is there in the balance sheet. Yes, as you can see over here. So we will take it. Okay. There was adjustment on that. That adjustment also we will consider. Right. Yeah, interest also we will add together. So 30,000 plus interest 1350. That is equal to 31,350. Is this clear? Simple and straightforward. Double tick the adjustment also. See here. Done. So we are only left with manager's adjustment. Let's just do that. Okay. Manager's commission we have calculated. It was how much? 2,785. Right? 2,785. So see, a manager's commission 2,785. Is it clear? Simple and straightforward. So manager's commission also done. Okay. See, manager's commission is what? It is an outstanding expense. Okay, here why are we taking manager's commission? Because immediately manager's commission will not be paid. At the end of the year, we got to know the profit. Yes. So what we have to do? We have to take it in the P&L, right? We have to take it in the P&L on debit side because it's an expense, and in the balance sheet we have to recognize it as a current liability. Okay, manager commission. Is it clear? That is what we have to do. We took it in the P&L as an expense and in the balance sheet as an outstanding expense. Fine. Manager's commission outstanding. Okay, I will correct this. Here outstanding word you have to write. Okay, fine. So 2785. Done. Next, do we have any more? No adjustment, nothing. All done. Now go back to the question and check for the balance sheet items from the start to end. Yeah, if you go from over here, we have taken everything except cash in hand, cash at bank. Let's just take it. Current assets 4,100 and 12,400. See here, cash in hand, cash at bank 4,100, 12,400. Okay. Next, what do we have? See here, we have capital. Capital how much? 70,000 opening balance, right? So see here, capital opening balance 70,000, and then what is the net profit did we do in this current year? 27,855. Take it. 27,855. In total it is 97,855. Is it clear? Simple and straightforward. So we are done with capital. Okay. Then what else? Only one thing is left, that is sundry creditors. Okay, 9,600. So let's just take it. Creditors, sundry creditors 9,600. Is this clear? We have taken everything, each and everything. Now if we'll add both of these columns, yeah, liabilities and assets, isn't it? If you total, then it will be equal. 1,43,690. Here also 1,43,690. So your answer is right. If it is not tallying up, then you must have done mistake somewhere. You have to go back and recheck your adjustment and recheck your totals and everything. Fine. Here I have written a note that in this question they have asked us to create provision for doubtful debts on other debtors. That is why we have excluded the Mohan. You know, we have not excluded the Mohan from the balance sheet. No, just for this calculation. Remember that. Okay. All right. Understood. Now the other 4 working notes, right, which I have not shown you. Further bad debts. Yeah, 800 into half, 400. Right. Provision for doubtful debts. The same calculation which I explained you in rough. Yes. And then depreciation calculation. Okay. And then interest on loan. 6-month interest we had to calculate from 1st October till 31st March. Isn't it? That's why 6 by 12. 9% was the rate of interest. So it was 1,350. We have done everything in rough. Isn't it? Yes. So that's it. It's really simple. The only thing that you have to understand properly is this. Yeah. This also you understood how you have to do it. Complete technique got fit in your mind now, isn't it? Yes, really simple and straightforward. That's all for this video. I hope you have understood each and everything. See you in the next video. Bye.